Directors like you are worried that HMRC is watching their every move. Now, HMRC are not spying on you personally. They're not sat in a room reading your bank statements for entertainment. But what is happening is something just as important. HMRC now operates a system that watches patterns. And that system is designed to track, cross-check, score, escalate. Now, most of this done is automatically, and that's what I mean when I talk about the new HMRC machine. It's not a person deciding whether they like your business, it is a system comparing the information you submit against the information that it already holds. Now, there is a very dangerous assumption that a lot of directors believe, and it's something like this. We're too small for HMRC to care. We've always filed everything. We've never been investigated before. They only go after the big players. But HMRC is not looking for the villains or the baddies, they're looking for risk signals. And the uncomfortable reality is that those signals are often created by normal behaviour, not deliberate wrongdoing. Now, that is why directors sometimes feel shocked when that first letter arrives. Because from their perspective, they've done nothing wrong. You know, something has happened that they wasn't really aware of. But from the system's perspective, there have been several small signals and they've accumulated quietly over months. Now, when I say HMRC are watching you, what I'm actually meaning is it looks like this in practice. It's not surveillance in the way that most people imagine, you know, a geezer outside in a van across the road with a pair of binoculars. HMRC get an enormous amount of information, financial information, through normal operations of the tax system, okay? So they know about VAT submissions, reporting on turnover, VAT liabilities, payroll data. They get that through real-time information. They get corporation tax returns detailing profit and loss. They get director self-assessment returns declaring personal income. Companies' house filings showing accounts and director filings, change of ownership, that type of thing. And then obviously insolvency records, when companies enter formal insolvency processes, HMRC find out about it. Now, they're also aware of payment histories, like how has your company paid taxes over time? What's the compliance like? Do you always put your returns in on time? Or you're one of those companies that's always late and never pays on time? They know about time to pay arrangements. So that's when you've agreed with HMRC, okay, I can't pay the VAT, corporation tax, PAYE for this reason. Can I pay you over this longer period of time? Okay. Now, all of these systems, they exist independently. But now, the modern compliance systems, they all talk to each other. And when the data aligns, nothing happens. Okay, it's business as normal. But when something doesn't line up, the system raises a question. It's not an accusation. It's not a judgment. It is a discrepancy. Okay? So there might be just a simple mismatch. Imagine like a business has got a VAT return that shows £500,000 turnover, but the PAYE records show very little payroll. The director's self-assessment shows very little personal income, but the director's loan accounts in the company are increasing. Tax payments have been late, I don't know, 3 times in the last year. Each piece of information on its own might be perfectly explainable. But when you look at it holistically, they form a pattern. And they're not saying, this system doesn't come up and say, Dave, the director's dishonest. It says, this profile looks unusual compared to this business next to it. And that's enough to generate a risk signal. Now, these risk profiles that I talk about, we don't see them. You don't see them. But they're real. Every business effectively develops what you could call a compliance profile, okay? Now, it's going to be built now from multiple indicators that I've just mentioned, you know. Are you putting things on time? Are you paying tax when it's due? Is your filing consistency? Are you filing consistency, I should say? And when you file them, are they done correctly? Are you in like an industry that is known for risk factor? Certain sectors have got historically higher non-compliance issues. If you as a director got previous insolvencies, because they know about that now. And of those insolvencies, was HMRC a large creditor? They now will be able to look at your behaviour over multiple companies. What on time to pay arrangements? Are you paying it? Have you had multiple time to pay arrangements? Have you got multiple time to pay arrangements on multiple different companies? And again, all of these things on their own, the individual events don't matter. It's all of them together. Like a single VAT late payment is not going to change much. It happens, okay? Not submitting your VAT on time happens. It could be a mistake. You could be on holiday. It could have slipped through the net. It happens. But it's a sequence of these events when it starts to change the profile, and this can cause the issues. Now, I really want you to understand this bit. You aren't getting escalated by HMRC because you're bad. It's because your company looks statistically risky. And the compliance systems now, they're designed to prioritise these cases where patterns suggest instability. Now, it's this instability that can arise, even if it's like a fairly basic issue, you're just struggling with cash flow, and it's a temporary thing, but you've been flagged now. And I want to dig into that bit, like how a director's triggering the machine. Because listen, this is a bit where it'll become uncomfortable for you. Because this HMRC machine doesn't trap you, you trigger it. But it's usually through very, very ordinary decisions with no malice intended. Step one, a late VAT payment. You tell yourself, right, just this once, I can't pay the VAT because I need that money for cash flow. They've not paid me, or this money hasn't come in. We're going to catch up next quarter. And listen, I've been there. I really have been there, okay? And in your head, it seems reasonable. But you're just going to get logged in the system. And one late VAT payment, okay, is one of the easiest indicators for this system to say, this company's got a cash flow problem. Another one is delaying PAYE. It's wages, and you can pay the wages, and you've got a supplier breathing down your neck, but you can't pay the payroll. So you push it back. And again, you're thinking, it's just this month. It's just this month. The system logs it. Now, PAYE is particularly serious because it represents employee tax deductions. And then you get to next month and you do it again. Another thing, time to pay arrangements. The time to pay arrangements are such a handy tool to use when you've got short-term cash flow issues, okay? That can happen from a number of reasons. Like I say, you've not been paid, a job's been delayed. There's many, many reasons why you've not been able to pay HMRC. And you can talk to them and you can agree a plan to pay them over a number of years in some cases. And it feels like a positive step. It is a positive step. But that's going to be logged on the system as well. Okay, time to pay arrangement, late VAT return, not paid PAYE. And then your time to pay fails. Now, if you set up a time to pay arrangement and you don't keep up with it, and what I mean by don't keep up with it, either you don't pay the monthly payment that you've agreed, or you don't file a VAT return on time, or you don't pay a PAYE return on time, or you don't pay corporation tax, your plan is then in breach. Your plan's failed. And the system sees that. Late payments, bad compliance, failed arrangement, outstanding liability. It's screaming, there's a problem here, there's a problem here, there's a problem here. And I touched on it earlier. Another thing that's causing problems is directors' loan accounts that are going higher and higher. Like, all this is going on that we've just mentioned, and at the same time your director's loan account increases and your taxes are overdue. Listen, it doesn't take a rocket scientist to say you owe HMRC 100 grand and your DLA's 100 grand. The reason you've not paid HMRC is you've took out all the money. HMRC aren't looking at that favourably. They can easily connect different systems now. They're looking, are you benefiting from HMRC not getting paid? And again, it's all about a pattern. These patterns are existing. Perhaps not fraud, but it's instability. And these flags get raised, and when the system identifies potential risk, there's a process that's going to begin. And it might not start with an enforcement officer. It could begin with some administrative. HMRC want clarification. They're sending a letter asking about VAT return. Compliance check into payroll records. There's an information notice for some documents. A routine inquiry into the company accounts. And at this stage, the situation is often manageable. But you can make it worse as a director. Now, investigations can grow from HMRC. And I think a lot of the time it's because directors respond poorly. They don't give it the attention and respect that it deserves. And like common mistakes can just be contradicting earlier filings. You've submitted something, it's a matter of public record, and you say something different. You are responding to HMRC emotionally like they've got it in for you personally. And they're interested about the facts. Mistakes happen. You know, you can't be guessing numbers here. You've got to be checking your numbers. Because if inconsistencies appear in your responses, the inquiry is going to expand. Got to be careful. You have got to have your numbers straight. And I hear it with directors, it's like it all happens so quickly. But from the system's perspective, it didn't. The escalation path typically follows a very structured process. It's risk scores generated, formal review begins, debt management get involved, enforcement warnings, and then eventually winding up petitions, stat demands. By the time a director realises the situation is serious, they're offering several steps into the process. That's why it feels sudden. But in reality, it's been going for months. Now, I want to touch about how you can protect yourself. Not how you can hide, not how you can pull the wool over the HMRC's eyes. This is what you should be doing. Best practice, okay? And the best thing is you don't trigger this bloody machine, and it means focusing on consistency. File tax returns on time, even if the payment is difficult or the payment can't be made. If your business is struggling, stop taking out money as dividends, because it's going to increase your director's loan account. You must be looking at a P&L every month. Are you making money? If you're not making money and you keep drawing out large amounts on your director's loan account, it's personal exposure. It can also trigger the HMRC machine. If you are lucky enough to get a time to pay arrangement, you've got to stick to it. Stick to it like glue. And as well as sticking to the HMRC time to pay arrangement like glue, make sure that you're paying your next VAT bill, your next PAYE bill. Like a real basic thing is having a separate VAT account, having a separate tax account. So let's say you invoice someone for £1,000 plus VAT. You know the £200 isn't yours, it's VAT money. And if you was to put the £200 into a VAT account once a month, you're going to have more in that VAT account than you need. Sorry, once every quarter, you can have more in that VAT account than you need to pay the VAT bill. Because remember, you don't just collect VAT, you probably pay VAT that you can offset as well. And you can do the same for your corporation tax. Please keep your personal and company finances clearly separated. And if your business model, if you're using HMRC's money to keep going, you've got to act early and get insolvency advice. Because if you are consistently using HMRC's money, there's going to be an issue. They are not out to get people, but the compliance system HMRC uses is constantly analysing patterns, and in 2026 patterns matter more than personalities. And if your records are consistent and aligned, the system just moves on quietly. But if the financial behaviour and tax filings tell different stories, the system eventually notices and it's going to escalate. Now, if you're a UK director feeling pressure, you're struggling with HMRC, you can't make your next VAT payment, you've got outstanding arrears, give us a call. We'll help you deal with HMRC calmly and properly. And if you've enjoyed this video, I want you to go over there and I'm going to explain exactly how you set up to a time to pay arrangement with HMRC, what you can say, what you can't say. Thanks for your time, Chris Worden.